Amrita, we're going to go it the other way around. I know you're on your way to Houston, so let's get our Texan drawl on and our big hats. Anthony's talking about a tight market. You say, and this worries me, we're going to have empty tanks in Cushing in February, and stocks are going to draw down. It's going to get tight in Cushing. Cushing, of course, is the storage. How bad is the situation in terms of storage at Cushing?
It's very, very tight. I mean, I just got to Houston last evening, and I mean, the general mood, of course, here is one where, I mean, there's a freeze-off coming this weekend, so production in the near term could be curtailed further. We are seeing very strong export demand for U.S. crude abroad, particularly from Europe, and both of those factors, along with strong demand, like Anthony mentioned as well, in the U.S. is keeping Cushing inventories low. And you've seen that in the time spreads. And I think that is just something for your viewers as well to look at those charts. I mean, the Brent and WTI, if you look at the backwardation, it's extremely steep. I mean, you're talking about $1.60 at the front. The Brent expiry, which was 2 days ago, was $1.90 for Brent. I mean, these are unheard of numbers since pretty much, I mean, not just a few years ago. For Brent, you're talking about 2011 when Libya went offline. So extremely tight. And if anything, comparatively, the flat price is actually cheap if you do a correlation between price and spreads.
I mean, you talk about that about that 7-year backwardation. I suppose this just plays to the fragility of supply. So let's pivot over to the meeting tonight. Or today, I should say. If they go ahead with the 400,000 ad, you've made the point on a number of occasions. They can say 400,000, yes, but they simply haven't got the ability to deliver. Now, where's the worst scenario in that promise? You know, how long can that gap remain? Why wouldn't Saudi just step in? Why can't Saudi just step in and close the gap?
So Saudi, on paper, of course they can step in. Kuwait, UAE, I mean, these guys, GCC in general, have the spare capacity. But the way the current deal is structured, it's unique because it is by country. And I mean, we've had by-country quotas before as well, but I think the downfall or the price collapse of 2020 has really made the group come together, where they are very much sticking to that by-country quota levels. And Prince Abdulaziz himself has made it very, very clear multiple times that we are not going to compensate for other people not being able to effectively not produce. So that's the problem we have right now, is that even if some countries have more spare capacity to give, they're not going to compensate for others.
Could high prices change their mind? Jeff Curry over at Goldman Sachs says that $90 a barrel around Brent might push OPEC to even hike production more than they're expected to, Amrita.
Yeah, I mean, I've seen that, but no, we don't think so. I think they're going to stick to the 400,000 for now, for the simple reason that, yes, oil prices are high, but you've seen delegates talk about this. It's due to geopolitics, Russia, Ukraine. The weather is a big part. Conversations with Prince Abdulaziz, I mean, and he's made a number of speeches. He's going to say that, look at where gas and coal prices are. Oil is nothing in comparison. And he, again, continues to highlight underinvestment by IOCs and Western companies in general, which is all true. Remember the Iran deal potentially nearing. There are some more positive talks. So I don't think OPEC Plus are going to preempt that, especially if we do get news from a breakthrough from the Iran talks, and then we get the Iranian barrels coming back. Seasonally as well as refinery maintenance. So there's plenty of reasons for them to just stay their course, even with prices where they are.
So you're in Houston, and I suppose the question is going to be, we're waiting to see where the Ukraine, Russia, US, G7 standoff comes to bear. An hour ago, I asked Ed Bell whether he thought it was folly to completely discount Russian oil being sanctioned in some way. Do you 100% say, no, not a chance, can't happen, won't happen? Or is there an element of tail risk to that statement and that risk of Russian oil barrels being sanctioned, similar to Iran?
Of course, there's a tail risk. I mean, you cannot say never. I think the point is that, look, there are options even this week through talks where potentially the situation could de-escalate. But we have been saying that, look, this is a very long drawn situation. B, the miscalculation on either side could absolutely lead to the situation getting worse. And if it does get worse, I mean, any reaction or any kind of full-scale military intervention will lead to sanctions. It's just that, you know, we wouldn't say it's a base case. You know, right now it's much more around, has Putin made up his mind? And it's very, very unclear that he has, whether to go into Ukraine. And I think that's why people are saying, look, sanctions are unlikely. But no, we can't say 100% it's not on the table. I think there's absolutely a tail risk for that.
How much then is priced into a barrel of oil with these geopolitical risks, and how much more richly priced could it get in if we see that worst case scenario?
It's a great question, and we've been going back and forth, you know, just looking at some of the positioning data. We think the market's priced in some of it, you know, some level of Russia-Ukraine tensions, but a full scale or the worst case scenario is absolutely not in the price. If anything, if you look at TTF, like gas prices, they are pricing in far more of the Russia-Ukraine situation and potential supply losses than oil. So I think oil, we could go a lot higher if the situation worsens there.